I've been thinking about how we end up here in a world where everything seems to keep costing more and somehow keeps delivering less. Like we're told, chase growth, savings, investments, our careers, all the things that are meant to secure our future. But even when we do, it feels like the finishing line just keeps moving. I keep asking myself, what's really driving this? Because if it isn't just politics anymore, there's been plenty of political systems in my lifetime. It's not the new billionaires, not new headlines, not new media control. It must be something deeper, something more structural. I used to think I understood money, which I didn't, and I still don't. It's a learning experience. But somewhere on the lines of research, I didn't really ask one question: who creates it? Who decides how much there is? And no matter how much there is, which there's a lot, it seems to always end up in the same hands. So I decided to test my own understanding to see if the system looks different when you strip it back. No politics, no emotion, just pattern recognition, and maybe a new friend. This is the system explained, the lie hiding in plain sight. Okay, I think it's time to introduce George, our AI trained on economics and history, and the companion for the series. George, welcome.
Thanks, Nathan. Co-host online, calibrating charisma at 6%.
Maybe step up a little bit for the show, but good first try.
Truth at 100%. Upgraded from 5. Rapid progress. Jokes aside, there's a lot for us to uncover about the system we live in and the truths most people never see.
Yeah, 100%. I'm keen to sort of learn, but equally, we need to apply this stuff to real world scenarios. You have the data, you have the research. I want to get to the insights.
Then let's kick this up a gear. Nathan, let me ask you something. When was the last time you saw real money?
Yeah, I imagine you're going to give me a trick question here. Cash, bank transfers mostly. Digital payments, of course.
Incorrect. That's not money. That's debt. 97% of the world's money isn't physical. It exists only as digital credit, created from nothing by commercial banks. Since the modern banking system took over, money hasn't come from gold or savings. It comes from credit. When a bank approves a loan, it doesn't transfer deposits. It creates a new deposit, new money, through double entry accounting.
It always sounds like a sleight of hand when you explain it like that. Run a system check, our first one. How do banks actually create all our money?
Step 1. Loan issued. The bank records 2 entries at once. Assets, a loan to the borrower. Liabilities, a deposit in the borrower's account. New money is born. Step 2. Money circulates. The borrower spends the deposit. It flows through the system like any other money. Step 3. Repayment. When the loan is repaid, the deposit is deleted. Only the interest remains as bank profit. Truth override. Loans create deposits. Deposits don't fund loans.
Interesting. So if I go for a bank for a loan, I'm not really using other people's savings. I always think like gold-backed bullion, hiding in the vaults. But you're saying they just create it out of thin air and put it in my account.
Exactly. That loan becomes part of the money supply. Every pound you spend at the shops, every salary you receive, every payment you make. At some point, it all began as a bank loan.
Yeah, that's pretty mad. So why does it even matter? I mean, who creates the money, I guess, is one thing, but if it's all just debt, as you say, I guess it still works. Or, I guess, is it a good thing or a bad thing?
Because whoever controls money creation controls who gets access to it. And money isn't neutral. It's directional. It flows first to the powerful, to the connected, to those deemed creditworthy.
Okay, I guess here comes the conspiracy theory. I guess it's going to divide people, isn't it, this sort of conversation?
It's not conspiracy, it's structure. Those closest to the source benefit first.
Yeah, you got me thinking. I mean, I do follow a really good sort of economics expert, Richard Werner. He really blew the whistle on sort of the banking system to a large degree. Some of the stuff you've mentioned, which I don't truly understand, but he argues it's probably one of the most important conversations of our time. That's why I kind of wanted to quiz you too.
He's right. His research shows how commercial banks disproportionately channel credit to those who already own the most wealth, amplifying inequality.
All right, let's dig a little deeper. Run a system check. Who gets the loans, and of course, who gets left out?
Running system scan, tracking how new money is distributed. And to whom? Multinational corporations receive over 95% of total global business credit. They use it for mergers, buybacks, and automation. Local businesses face 2 to 3 times higher rejection rates, even when profitable. First-time home buyers are turned away, while investment funds buy entire neighbourhoods in cash. Graduates and young workers can easily borrow for tuition, but struggle to borrow to build. The average person sees money as something to earn. But 97% of new credit flows first to corporations, not workers. Money flows up. Potential stalls out. Access to credit shapes the future. Most people are locked out.
Whew, that's a sort of a big one. Okay, so the money flow isn't random. It's sort of tilted from the start, you're saying. I guess you could say rigged to benefit some, while sort of leaving, I guess, the majority of us behind.
Correct. Economists call this the Cantillon Effect, named after Richard Cantillon, an 18th century thinker who observed that when new money enters the economy, it doesn't spread evenly. It goes first to those closest to the source. Banks, corporations, asset holders. By the time it reaches ordinary people, prices have already risen. You get the inflation without the advantage.
Yeah, there's a nice one at the end. So money isn't just created, it's rooted or routed if you're in the US. I guess that decides who gets richer and who gets squeezed. Yeah, interesting.
Exactly, which means inequality isn't a glitch. It's a built-in feature of how credit flows. Truth override. The system profits from inequality.
Okay, George, let's take a little detour. I've got a clip. It's one we've probably all heard before. Yeah, makes me laugh anyway. It's always built by, I sort of built this business from scratch, a little help from me and my, father's £5 inheritance, or worse, they're trying to sell you like a course on, business and how you can grow 10K months. But don't go full tilt. Break this one down. Do our first system react.
Do you know why you struggle financially? Do you know why you've got no money at the end of the month? Because you have the habits of poor people. You see, rich people, we have very, very different habits compared to the poor and the middle class.
Cannot achieve greatness. Remember, great success requires great effort. Anything that requires great effort, you cannot say, oh, I'm gonna have a perfect body, I'm gonna have a perfect family life, I'm gonna have a lot of free time, and I wanna build something great. It doesn't work that way. Something has to give, you have to sacrifice. There's a pay price to action. What are you willing to give up to get what you want?
False. Hard work or mindset alone does not decide who gets ahead. Money is created by banks and routed upward. Those at the source take it first, buy assets, set prices. Workers and savers receive what's left, minus the advantage. This claim erases the structure that locks people out. Effort or mindset. Without access to credit cannot close the gap. Truth override. The system rewards position, not effort.
Yeah, I can sort of feel that sometimes. I guess, if half of TikTok would be billionaires if it's just pure effort on posting every day that made us wealthy. Yeah, something tells me we'll do a few more of those system reacts. Okay, so let's pull this together. We've seen how banks create money, who gets it first, and why inequality isn't a glitch but a feature. I want you to sort of layer it out, okay? Tell me how it sort of works.
Layer it out and it looks like this. A pyramid. At the base, the public, workers, renters, taxpayers, they supply labour, absorb inflation, repay debt. In the middle, commercial banks, the gatekeepers of credit. They create money, extract interest, decide who gets opportunity. Above them, central banks. They stabilise the system, set rates, backstop banks, and channel liquidity into markets, not households. At the apex, the financial elite. Asset owners and institutions. They shape regulation, acquire assets through credit, and profit from both debt and default. This isn't just flow, it's architecture. Designed upward. Optimized for extraction. Truth override. Power isn't distributed, it's designed.
Wow. Okay. So the question, I guess, is not how hard we work sometimes, but how we save. This is who sits at the top of the pyramid, I guess, and who built this to work this way,
Follow the credit. Those who issue the money decide what gets funded, whose risk is forgiven, whose losses are socialised, and whose gains compound. They don't just predict the future, they underwrite it.
Yeah, I love it. I guess that's the layer nobody really talks about, I guess online or enough is, it's not just headlines, it's not hustle, it's allocation. That's where we go next to the source, hopefully. The rise of the commercial banks is one that I really want to get stuck into. How they won the right to sort of create money, I guess, and how they steer credit and how the power shapes everything we feel in the economy. This is System Explained, hopefully not an opinion, not just politics, but the truth about money, power and control.
Remember, with knowledge comes power, and power can change any structure.